Good morning, everybody. Mike Vaki, Princetontrader.com here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, I am back from just a few days off down in Florida. I am back on the desk though, and the content schedule will be back to our usual self. I already sent out the pivots; those are up on Twitter, and the website and everything is clicking per usual, and we'll get back to doing these every morning. So, quick recap. S&P 500 E-mini futures daily chart. I left the ovals and stuff up and the arrows from my 25 minute discussion with my subscribers last night. The gist of it is this. We continue to make floors in the market. 13 to 15, middle band, 2 days worth of support, then down to 44, the 50-day exponential moving average, which held. It was resistance here on that key area October 9th, and it was resistance back in April, May. It's been broken above. It needed to be resistance again. The bears have missed an opportunity to turn a 10% correction into a small 2-3 day bounce and then have that reverse. Instead, what's happened is the bulls have run with it and have started to create floors like they did during the course of the uptrend 2013 and early 2014. So where does that leave us now? The high of the moment is 1981.5. The upper band sits at 2003.88. Lower band, middle band, upper band, middle band, lower band. That's how the mini trades. Lower band, middle band, upper band, middle band, lower band. That's what it does. And the market, at least the mini, has transformed now from something that wanted to trade below the middle band and therefore sell rallies. We sold rallies 200 handles worth here. If you've been selling rallies past this 2-day support in the middle band, I would imagine you've been struggling. We're above middle band. Above middle band, we buy dips. You need to be buying these dips. The bears had their chance. They're not doing much with it now. We're back above the middle band. So the bulls get the benefit of the doubt. And now we're sitting well above the 50-day exponential moving average with the upper band a mere 20 handles above. And you've got Janet Yellen in the on-deck circle, 2 o'clock today. So I would expect some pretty serious volatility come 2 o'clock. But what this chart is telling me that likely once the noise gets out of it, we're likely to resolve higher. Now that doesn't mean you get to game the Fed. Anybody that's followed me for any period of time knows I tell you guys every time we come around, don't game the Fed. There's 2 great ways to get your head taken off today. You can come in there at 158 and say, look, 1815 to 1981.5 or wherever we happen to be at 159, we're going down. I mean, we're up, so we have to go down. No, we really don't. Getting short because we're up a bunch is a disaster. Just like getting long because we're down a bunch is a disaster. That's how you end up with 9-day band rides with a day off and another 9-day band ride. You can't do that. You have to see what the chart tells you. And I would imagine if we do a downdraft today, that yesterday's low at 56.57 is going to be pretty tough to break. And if we get a move to 56.57 at some point today that holds, I'm a buyer for a move to 2,000. Now, if that area gets broken, that's a different deal. But then we have to get back into, can it break the 50? Can it break the 20? Can it break the 200? All these big layers of what are now support that should have been resistance, but those were opportunities blown by the bears. So we'll see what happens at 2. I'm not going to be doing much into 2 o'clock, and then we'll see where we are. But right now, what the chart tells me is we're on our way to the upper band again. And the last thing I will tell you, Thursday night, I tweeted out, we had this Ebola scare in New York City. Had a guy hospitalized, and all over Twitter, everybody was talking about, we're going down, we're going lower. This is devastating to the markets. Okay. We were down 11. and we were still 14 above middle band. When truly devastating things happen to the market that break at 2:30, 3 o'clock in the afternoon, we're down 40 handles, we're down 50 handles. The middle Bollinger Band snaps like a twig. So that was your tell to say, look, this is not a big deal to the market, and the market's going to shake this off, and we're going to go higher. And I tweeted that out at 34, and it was basically up since. But that's just a little lesson in, look, you got to understand what's out there on Twitter. The people that wanted the freak out that night are the people that are underwater, buried, and left for dead from back in the 1800s that have been fighting this move all the way up. Since probably, I don't even know since when. But, be careful. There's a big difference between what the chart's telling you and somebody that's talking their book on Twitter at 8, 9 o'clock at night. Okay, really happy to be back. Check us out on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. Today's a great day to start. I got a ton of trials in that the team has been working with, and I'm gonna get to work with them all day today for the first time. So come on in and join them, and we'd love to meet you and see if we can help you, learn how to trade this stuff. And I will be back tomorrow morning with another webcast. Trade them well.